Welcome to another episode of Colquitt's Corner, and today we're going to do another reaction video to Jim Cramer talking about the S&P 500. He's going over some technical analysis, and what we'll do is we'll go ahead and take a look at some charts afterwards, look at Ichimoku, and see what levels relate or differ from what levels he discussed. Let's go ahead and take a look at that video right now.
Check out the daily chart of the S&P 500 E-mini futures, right? Last week, the S&P broke down, pulling back to the 3,000 level, all right?
3,000, okay.
It's the breakdown.
Support.
Which turned out to be a significant floor of support.
Yeah.
That floor held, and the index came roaring back. Because the floor held, Garner's betting the bulls will be in control going forward. What's that mean? Simple. As long as the S&P can stay above the 3,000 line, she thinks that that opens the door for a retest of the all-time highs near 3,400. The next ceiling resistance is around 3,250.
Okay.
If we can clear that hurdle, Garner thinks it's smooth sailing to that high. When you look at the relative strength index, which is down here, the RSI, it tells a difference. It tells a very similar story that can make this thing work. The RSI itself is an important momentum indicator. It's pointed higher, and crucially, it's still in the middle of the range, meaning the market's not yet overbought. That's important. That tells Garner we can there's still more room to run. If it was up here, then we'd be a lot more worried. What if you zoom out to the monthly chart of the S&P 500 E-mini futures? Okay. You can see that the actions created a kind of expanding wedge. That's a very, very bullish pattern. Now, before the pandemic hit, we had irrational exuberance that took us to new highs. Then COVID came along, and the S&P crashed because we were in the grips of an irrational, well, let's just say, a fear that was justifiable, but when it came to the stock market, maybe not. Now, though, the fear's gone. The market spent months snapping back, and Garner thinks this momentum could carry us back into irrational exuberance territory. If we head back to the high end of the wedge, she's betting the S&P could make new highs around 3,500, which aligns with what we saw on the daily chart. Plus the RSI, again, mid-range, all right, meaning we aren't overbought on the monthly chart either.
Okay, so there we go. He mentioned basically a support at 3,000, a resistance at 3,250 that we need to break so we can go higher to 34 and possibly even higher to 3,500. So let's go ahead and take a look. He mentioned the daily. All right, let's take a look at a daily here. And we're looking at the Ichimoku chart, and you can see that support at 3,000 lined up perfect with an Ichimoku level. That green line, that Cajun sand is what it pulled back to. And that's a great pullback level. It held, and now it's trying to go back up and retest that pivot and get back up to that 3,250, where you can also see marked off their hit, and that's where it basically pulled back. So looking at those two levels, if you even look back in the past, you can see those levels have been very important all along. And that's key to look for those, even without Ichimoku, even just basic price action. If you go back and look where something was once a support became a resistance, or resistance became a support, you can see that just along there. But the other thing too that's reassuring is just seeing these levels match up with Ichimoku levels, okay? Now, he didn't mention anything about the weekly, but let's take a look at the weekly here. And you can see on the weekly, we are currently still in the cloud, but we do have a breakout, which is represented by the shaded area here. And this green shaded area says we have a bullish breakout potential, which again is a positive sign, going back to him saying us possibly moving forward, getting up to that 34, possibly 3,500 level, right? But we need to get back out of this cloud. We do still need to break that 3,250. That is a very important level. And here you can go back and see again, even on the weekly, that 3,250 as well as that 3,000, if you look back in the past, matches up with some Ichimoku levels. So again, basically reconfirming that these are very important levels to pay attention to. Now let's go ahead and take a look at the monthly. And you can see here again, plain as day, matching up. Now maybe not so much with an Ichimoku line, but with the IMTF trade indicator, what it does is it creates black crosses that we call IMTFs. These are multiple time frame Ichimoku levels, okay? And these black crosses occur at those levels. And you can see right there at the pivot, there's a black cross, and that 3,250 matches with that. And if you see below at the 3,000, if you look back, that matches up with another black cross as well. So again, just reconfirming that these are important levels, okay? So it's great to watch these videos. It's great to have Cramer put his knowledge out there, talk, especially I love it when he talks about technical stuff too. But even anything, the fundamentals, all that stuff, the idea is to be able to go back to the chart, right? Take these fundamentals, take whatever it is that got you interested in that stock ticker, whatever it is you're paying attention to, take the technical analysis, right? Go look for those key support and resistance levels, especially if he's throwing them out there. Go see if it backs it up like we have here. This is a perfect example of him pointing out key levels and then be able to go find them on the Ichimoku levels or whatever indicator you use, but I prefer Ichimoku here. It points it out very well. Very easy to see. And now you know which levels to pay attention to. So now you know to go put your alerts at these levels. So that way you can, well, if they hit off, you pull back to that 3,000. That's not really a good sign then if we pull back to that. But if you get up to that 3,250, now you need to pay a little bit of attention. Should you take off some profits maybe, tighten up your stops because we get up there? Could it bounce, pull back, so on? Or we break it and keep going higher? Either way, at least you now know to pay attention. You at least now know to go put your money management in. That way you don't go on this roller coaster ride and get mad because you were able to catch this pullback, this opportunity last Friday, and go back up and ride up for a little bit of profit. And then you're giving it all back, right? We all don't want that. But again, here we are, taking a look at some technical analysis, another reaction video to Jim Cramer, and I'm glad to see that we can look at our charts and they match up with what he have to say. So it's a little positive reinsurance that we're in the right direction, or at least we're paying attention to the right key levels. So I hope this helped you out. I hope you're able to understand. If not, comment, ask, email, whatever. Please shoot. I'd love to respond, answer any questions y'all have. Other than that, look forward to the next video. Catch y'all later. I hope you enjoyed this video and all the other ones I have to offer on my channel. Make sure you like and subscribe. You can also check me out on my social media. I'm particularly heavy on those when I post all my trades, things I like. You can follow me, comment, let me know what you feel, give me some feedback, and I look forward to seeing y'all again.